All right, hello everyone. So this is a short video, right, for these swing days. Sometimes people don't understand. So I thought I'd do just a short video because I do it every now and then so you guys get the picture. Whenever there's a swing day, for example, this is 11th of November, right? Remember, on the weekend, I'm already posting the swing days, and I've already posted the swing days for next week. Okay, so they're all on there. So November, let's get into November, and yeah, tomorrow is the 18th, and you can see it's already on there, right? And prior to that one, it was what, 18th of November, 15, 14, 13, 12, 11th of November, all right, which is there. All right, so here are the dates for everything. Now remember, when I'm posting a swing day, we're expecting the market to turn around, or we're expecting the market to push around. Okay, so we're either turning or pushing so that we could go in a certain direction. Now I've posted a post as well since June. Okay, so this is the 1st of June here. All right, 31st of May. Since the 1st of June, these are the dates I've been given. Okay, so we have a push up, push down. Up from an up level, there's a push down. From this level, there's a push up. From here, there's a push down. From here, there's a push up. From here, there's a breakout up. And you can see all of this stuff. Now, I've put X's on some of these. Why? Because it's following a Friday. So this is like Friday coming into Monday. All right, let's check it out. So this is the 19th. And as you can see, that's the 20th. So Thursday, Friday, and then we've got the 23rd, you see, Monday. All right. So because this is a Monday, it could be follow up from a Friday, just like with a Thursday and a Friday, right? And same kind of thing like Thursday, Friday, bang, down. So this is why this is actually, I've crossed it out, you know, in any case, I've crossed it out. Here I've also crossed it out, despite the fact that it was at the highs, but the high came in actually on that day, and then the market pushed, and then from the lows again, from those support levels, we pushed up, and this is, you know, like end of October pushing downwards. Okay, so when there are X's around, you'll see that more often than not it might be a Wednesday, Monday following up. So that's the 9th, that's the 8th, 7, 6, so that's the Monday, right? That's the 5, 6. So Tuesday was a swing day, and then we had a Wednesday, Thursday, Friday, and then that's your Monday. All right, so the market goes into Monday. As you can see, after the Friday, it's the Monday, and then the Wednesday, the market pulls back. So when we're like coming in from a weekend, it can be a bit tricky, but other than that, you can see, even if it's tricky, you can pretty much understand what the market is really up to. Okay, and those are the only times actually, you know, we had a bit of a drama because of those weekend to, you know, Monday, Friday, like weekend starting a new week kind of thing. Okay, but in addition to that, what you need to really understand is whenever you have a swing day, what you want to see, for example, on the 11th of November, right? So this is the 11th of November here. Okay, that's the 8, 9, 10, 11 is, that's the 11th week. Okay, so we've got Thursday and Friday. All right, so we've got Thursday and Friday being the swing. This is the last, okay, of the week here. And then before that it was here, which was a Friday. And remember, we had Monday, Tuesday. All right, Monday, Tuesday. So remember, from your technical analysis, what are we really doing? We're doing two things here, right? We're matching a technical analysis, plus what we want to do is get the timing right. So if I have an impulse wave, okay, and I've got swing days coming up, then there are two things that can happen. This is either going to turn around and keep pushing up, or we're going to crash down because of the big fall here. Okay, then what you have to do is come in to your, what you would call it, your swing hours of the day, don't you? So you have to come in, let's come into the gold, okay? And then you've got the 5th, let's do that. Okay, so let's go on to the 5th. Okay, so then you've got your swing hours coming in on the 5th, okay? And if you take a look at the 5th of November, let's go into November. take a look at the 5th. Then, okay, so if you go into your members area, right, you come into the 5th, you'll see these trading hours, okay, the 5th of November here, okay. So if you're going to buy or sell, it doesn't matter what you're going to buy or sell. It depends on your bias. Once you get the bias right, which is what we're doing here, oops, on the daily, where's my gold daily? Here's the gold daily. You see how the market's pushing down. So if my bias is towards the downside, okay, after the impulse wave, then I start using the hours on the 5th, okay, to look for the short side. Now you can also do this technically, right? So for example, we had what, 430, that's your 430 there. And we had 555, which is here. Now this is 445 because it's winter time. The platform is 1 hour behind, okay? So we had what, 430 my time, it's going to be 330 here. All right, so that's your 315, 330 there. All right, and that's your 445, which is going to be 555 my time. But if we're at the tops, what you're looking for a sell, okay? Or if you're following an impulse wave, remember what we do when there's an impulse wave, okay? If there's an impulse wave down, that is your impulse wave. What are we doing? Basically, we're waiting for a level where we can sell off at the retracement. You could do the same for this impulse from Friday. Okay, as you can see, we're back on the 37.5, 50, and we're pushing down. If you wanted to wait for the breakout, what would you do? Because some people prefer to wait for the breakout. Well, if that's your high after the impulse, that's your low after the impulse, then you're going to wait for the breakout, the pullback, and sell off again. Now, the pullback comes in on Wednesday, and Wednesday is the 6th of November. So you can go then to the 6th of November. Let's check out the 6th of November. And do the same thing. All right, so this is your 6th of November. Okay, these are your trading hours on the 6th of November. So 6th of November, market breaks down, pulls back up. Let's see what hours those are. Okay, 6th of November. Now look, that's 10 o'clock. Okay, and what did we have? We had 8:50. Okay, 8:50 is 9:50 on the platform. So let me just do that for you. Okay, so here we are. All right. That's your 8:50 my time. Oh, sorry, 8:50 my time is 7:50 on the platform. What am I talking about? 7:50 on the platform is there. So the market crashed down. So you wouldn't have entered here. And then the next hour you've got is what? 10:05 my time, which is 9:05. And then 9:30. This is 9:30. All right, my time. So 9:30, the market retraces up. It's a trade hour, okay? And then the other hours are what? 3 o'clock my time, so which is 2 o'clock on the platform. So this is your 2 o'clock right here. And then I've had 5:55, which is 4:55 on the platform, okay? And this is your 4:55 on the platform. You see what I mean? So if you understand, we're going down. You can break down, pull up, and then sell off as well, because you know technical analysis. Remember, technical analysis and time is what we're matching together. And the reason I can't do this like during the morning, explain to it all during the morning, is because things are happening after the video, right? So this is why knowing your technical analysis, knowing there's an impulse wave, there's a swing day. If you want to sell it off on the breakout, you can wait for the breakout. You're not late. You just need to wait for it to retrace to a goodbye kiss level plus a trading hour. When they match, then it's bingo. and that's basically it. And then just follow it to the PST price levels, or you follow it to the next hours and just manage your trading on the swing hours. Okay, the same thing, but the concept is really, really easy. So if there's no swing day, okay, all week, look, I had the swing days from the beginning of the week on Thursday and Friday. Well, what does that tell you? The PST is breaking down and the swing days are on Thursday and Friday. Okay, plus we had targets all the way down on the PST levels, as you know, at 2,550s and so on. Why? Because that was according to the weeklies have gone by, plus any daily. We would have also had, let's take a look. Let's go to the daily here. It's a bit more clean. Okay, so on the PST indicator, okay, so this is a new setup done on Friday, so yeah, or on Thursday. But you know, we get the targets from the PST and we see where we're going, okay, and you also have them on the price time on the weekly too, right? Whenever there's like going somewhere, look, 2,554. Okay, so they're on the PST indicator, on the price or on the momentum. So it's all pretty much in there. So once you have your targeting as well, you understand we're following it down into somewhere, which is here, as you can see, and that's how it's panning out. So once we have a breakout, you know, I don't stand in front of a PST breakout, so we just have to push it in that direction on the swing hours, and that's it. And the trading days as well. If we have a pullback, one of the guys said, I didn't mention Thursday because Thursday was a big day. For me, Thursday was not a big day, it was a retracement. I can understand you calling this a big day. At the end of the day, it's bigger than most bars. But look, this is the impulse wave. After the swing day on Tuesday, a mass fall on Wednesday. So Thursday retracing up is great because now we've got a Friday swing day, which is a whopper. And even if I don't trade on Fridays, as you know, Friday's there, Monday, you're just looking to push because the swing days are on Thursday and Friday, and we've got a PST breakdown. Okay, so that's that. The minimum you could have even sold all the way to here, because I did say we have to watch out because maybe this will turn into a head, shoulder and head, but it's just broke out nice and clean. So as you can see, we've got a bit more room to go down, and this is like a nice push down. You see what I mean? So I hope this video helps to clarify things, but if it doesn't, and if you have any questions, always shoot through, because at the end of the day, when we have a swing day, we're looking for places to get our heads in. And if you know your technical analysis, if you learn technical analysis from me, this is just the only things you're going to need on your chart is exactly what's here. Your two lines, support, resistance, and your targeting. Every now and then I add manual lines, it is true. And I know this looks a little complicated, but don't let this complicate things, because I'm working on a few things with respect to timing the markets. Okay, this is why I've got a bunch of lines here. Normally my chart is very clean, and the reason I'm using this is right now just for doing a few things with the timing. That's all, because normally I don't like a lot of stuff on my chart, and I don't recommend a lot of stuff on people's chart either, simply because it's just like, not really clear. But if you've got the swing days and if you've got your chart clean, all right, like this, that's it. Okay, because you understand where you will want to buy and get in, and you got your price targets there, so the market still has a bit of room to come into. Okay, and then next week as well, we'll be checking the weekly setup. Okay, not that this week is set up from the downside, there won't be a change. Okay, but from the upside, well, I don't think there's going to be a change much here, but we'll see how things pan out. And if you're using your PST as well, you can just draw your lines manually. it'll still work. It won't give you a price, but it'll give you like a direction where you're going into, and so on. If the market comes back down, you can draw your goodbye kisses here as well, from a low to the next low. And look, this is where the previous week stopped, right on the targeting. You see what I mean? So if you just draw these out and you're following your price and you're following your PST, your direction is pretty much set. And then all you have to do is, on the smaller time frame, just look at all the hours. If your direction is down, you just trade on the highs and sell off. Okay? And even if you don't know which time it's going to be, sometimes people say, Marty, there are a few hours there, what to do? Guys, we've learned technical analysis, right? So all we have to do is apply what we've learned. Okay? So this is the market going sideways. How do we do that? Well, all you have to do is just, you've got two bottoms, draw your line, and you've got one top there. Okay, there it is. Okay, and that's basically it. This zone is your Fibonacci zone, but even if you got confused here, then look, at a trading hour, we've got a breakout. The market breaks out. The minute it pulls back into a good buy kiss, fill in the gap, and that's it. It's game over. So even if you don't, get that right, because we want to sell expensive, we want to sell expensive. But if you've missed out on it, you just wait for the breakout. It comes back into a pullback, does your good buy kiss, mind the gap as usual, and then let it go. Okay. If you keep it nice and simple, it's not going to be a big deal. And don't muck around in the middle of nowhere, which is something I always say. Trade, if you're going to sell, either trade off the highs or wait for the pullback of a breakout. If you're going to buy, wait for the lower levels, your swing days lower levels, and the hours. Or wait for the break up, and then on a retracement into your trading hours and your technical level, like a Fibonacci, or your support resistance, or your weekly, daily pivots that we use all the time, or the lows of high of previous days or the weeks, which they work really good, or the PST levels, then that's it. That's basically it. So if you have any questions, though, shoot them through, but I think it's clear. Sometimes it's a little difficult because it's the first time a lot of people trade like this, where we have time and price together. But once you get the hang of it, especially with the technical analysis, you're just matching the level to the hour, and you're like, okay, that's it, bingo. And if it doesn't match anything I see, I just stay out. Stay out of the game. Let it do what it needs to do. When things clear up, match it to your hour again with your level, and then nail it. All right, hope that helps. But in any case, if you have any questions, I'm more than happy to answer, because I understand, this timing concept is new to a lot of people.